We start with the markets. The major indices snapping a four-day winning streak. The Dow closing lower by nearly 140 points as trade jitters crop back into the markets. Let's get to Eamon Javers in D.C. with the latest. Eamon.
Yeah, hi, Melissa. We're getting some new headlines crossing from that Bloomberg interview with President Trump that just wrapped up here within the past hour or so at the White House. Bloomberg reporting that the president said a number of interesting things, including that he's thinking of withdrawing from the World Trade Organization if that organization doesn't, quote, shape up. The president also saying he'd like to index capital gains taxes to inflation. That's an idea that would require congressional approval. The president saying he doesn't regret appointing Jerome Powell to the Fed, even though he has been critical of Jerome Powell's moves at the Fed to raise interest rates over the coming year. The president still saying he doesn't regret that appointment. The president also saying that Attorney General Jeff Sessions is safe in his job until at least the November elections, which isn't all that much running room for an attorney general to have from the president of the United States. So watch this space. Also, the president saying that he's not going as far as to say that he wants Google and Facebook and some of these other social media giants to be broken up, but he is saying that many people believe there might be antitrust problems there. So the president throwing that idea out there as well. Meanwhile, elsewhere in Washington, some high anticipation in terms of that U.S.-Canada trade negotiation involving NAFTA. Take a look at the U.S. Trade Representative's office at this hour. Reporters camped outside waiting for any developments here. We're just a few hours away from tomorrow's deadline to finish up negotiating to see if we can get to a NAFTA 2.0 here between Mexico, Canada, and the United States. Chrystia Freeland, the Canadian negotiator, the top official here on behalf of Canada, has been updating reporters. Here's what she said just a short time ago.
Together with the Prime Minister and Ambassador McNaughton and Minister Dominic LeBlanc, our Minister for Intergovernmental Relations, we had a very good call with the premiers of Canada's provinces and territories to give them an update and to hear their views on the negotiations.
So that gives you a sense of the process there. If they're calling all the different provinces and territories, you would speculate that they might have something to brief them on in terms of specifics. No specifics have leaked out of this, Melissa, though, at this point. So we're just sort of waiting for word from inside that building over on 17th Street whether or not they've got a deal or no deal. Tomorrow's the deadline.
Yeah, and Eamon, a little bit more clarity on the deadline of tomorrow. How was that imposed? Does Congress need a certain amount of days to approve any sort of a deal before the next administration of the new Mexican president takes a hold? I mean,
right.
How do we come to Friday?
Yeah, it's sort of a soft deadline, right? And the president just said in that interview with Bloomberg that either they're going to get a deal with Canada by tomorrow or they're going to get a deal in a period of time, he said, not specifying exactly when. So the reason that everyone is focused on Friday is because they want to have this signed, sealed, and delivered, passed by the United States Congress, vote up and down, and then have the opportunity to sign it before the new Mexican administration comes into power on December 1st. So you back out the time from December 1st until now, and you get Friday as what people expect is the last possible day where they can do this and still have the current president of Mexico sign this deal, not wait for the incoming Mexican administration. That could change the whole complexion of the deal. So negotiators want to get this done as soon as they possibly can because of that.
And just quickly on the comments about Google, Facebook, as well as Amazon, do you know the context of the question? Do you know what the question was? Was he asked whether or not they should be broken up? I mean,
yeah, I don't have a full transcript of that yet. They're releasing some headlines as we go along here. The other thing is that the president's been very critical of Google over the past 24 hours. You remember yesterday he released that video bashing Google, saying that Google didn't promote his State of the Union address, even when it promoted Barack Obama's State of the Union addresses in previous years. Google came out with a statement saying that's just not true. We did, in fact, promote it. We've been having sort of a back and forth here, war of words between the president and Google over the past 24 hours. So dramatic stuff in terms of the tech space here in the White House.
All right, Eamon, thanks. Eamon Javers at the White House. In the past, buying these so-called trade war dips, they've been pretty good entry points in this market. So do you buy the dip that we saw today, Guy?
Well, it wasn't much of a dip, but the answer to your question is yes. About 9 hours ago, the president tweeted out, the financial markets better than anticipated. If you've made a fortune in your 401ks, you should be happy. But the end of that tweet was, more good news is coming. I mention that because I think this China headline is the president putting it out there because he knows a deal with Canada is going to get done. And I think that will give the market some levity tomorrow, I think, or to just help the markets rise before the long weekend. And I think in his mind, it puts pressure on the Chinese. So to answer your original question, yeah, I think you do buy this dip, if you want to call it that. And I do think there's going to be a trade agreement with Canada over the next 24 hours.
But the tariffs on China goods still to come. And it's surprising because I thought it seemed like the markets sort of assumed that they would be coming. I mean, the deadline for public comment is next week. The assumption was that there would be no further talks and that the next round of tariffs would go into effect.
Yeah, well, listen, I mean, since the market, made its bottom in February, March, the dips have come from commentary regarding trade. And I think, obviously, as far as North America is concerned, we've made some incremental progress. I think the real issue with China is this. So let's say you have NAFTA 2.0, and if you think about how much we trade with China, Mexico and Canada are 2x that, okay? So China is important from the standpoint that they're the ones growing at 6.9% a year, hopefully, their country. And the global economy needs China to keep chugging along. So when we see about risk asset prices in China, we see what's going on over there. That is kind of the worry that I would say. And then when you think back to what's going on here with some of our stock market, we know that the S&P is 1% from all-time highs, but look at autos, right? Look at U.S. Steel, look at home builders. I mean, these are sectors that are basically down 20% from their 2018 highs. So there's some weakness lurking under the hood.
If we do get some good news out of the negotiations with Mexico and Canada, I think the market is likely to extrapolate and assume that the bluster that we're getting in the short term with respect to China is likely going to be resolved at one point or another. And I think the evidence of that is in the market action that we saw today. We were down less than 0.5%. We're sitting very close to the S&P's all-time highs. The one thing I would say is that the area where you did see some weakness, industrials and emerging markets, would be the two areas that would get the greatest exposure if you had a problem. And of course, the market action makes complete sense.
So we're buying those names.
No, I mean, look, not right now. I think you got to wait a little bit. I think there's a little time to tell here. I agree with everything that everybody said on the desk here. I look at today and said it was a total blip on the radar screen from the standpoint of reaction when that headline hit, taking the market down barely a little bit. And look at semis, however. Semis did roll. SMHs, they rolled quite a bit. It took a lot out of the SMHs. But so I'd avoid that group at least for the near term. But I do I think that we're going to get to some sort of resolution at some point in time. I think the headlines about China, anything that's said about China right now, the market is sort of digesting in a much more sort of like push it off way than they have in the past. And I think that's just going to be the way it is until something's actually resolved.
Yeah, I just guess the worry is that we've seen expectations go up dramatically. We've seen our GDP print after Q2. We see what's happened with Q3. It's kind of supposed to be the second consecutive 4+ print. We see the city surprise index making one-year lows. So what does that mean? That means expectations are high, and it's getting harder to beat those high expectations. So we have the stock market near all-time highs. You do have some weakness, like you said, some of these industrials under the hood. What is it saying? So if China were to slow down, if they were to take this thing towards the end of the year, then you could see considerable economic weakness here, because, again, we're not seeing wage growth, inflation adjusted. We're seeing potentially consumer costs going up with further tariffs with China, and it doesn't seem like President Trump wants to blink here.
So you think that the impacts of new tariffs, which are going to come into effect apparently next week, that will impact the markets, the Chinese markets, U.S. markets, the economies right away?
Right.
That we will see it in the next sort of print.
Now, let's be very clear. So that tax cut that we got in December, it didn't help consumers, okay? So if wages aren't going up on an inflation-adjusted basis and then consumer prices are going to be going up here, then we got a little bit of a problem.
But I think the biggest concern is, I think you look at China and you say to yourself, they're kind of in a really bad position right now. So I say the president understands that one of the biggest fundamental stances there right now is capital outflows. They want to mitigate capital outflows out of China and also their currency, making sure their currency stays relatively stable. So devaluing it is not in the cards. I look at it and say he knows that. He could push really hard against them right now. To what extent he can push, meaning does it take their economy down or slow it down to the point where it's risky?
The Chinese market reflects this also, by the way. Let's bear in mind that the U.S. market, we're essentially trading at all-time highs. The Chinese market is not. Okay, neither is the Chinese currency, although that's a separate issue. The fact that equities in China have pulled back as much as they have is evidence of who essentially is on the losing side of this battle as far as investors are concerned at this moment. And right now, it is the Chinese that are the losers as far as investors are concerned.
Any deal, though, that comes to fruition by the end of the year, I would imagine, would have a lift to the Chinese stock market as well as the U.S. stock market. Which market would go up more?
Chinese, I believe.
So is that the better trade?
Well, but I mean,
if we are to believe that all this bluster like we saw with Canada and Mexico, which ultimately sounds like it's going to lead to an agreement by tomorrow or sometime thereafter, is the same as what we're seeing with China, then we are to believe maybe that there will be a trade deal on China as well. And so therefore, what happened to the market?
Except I'm not going to contradict myself a little bit. Now, David's correct. It would appear as though the Chinese are losing. From the outside looking in, that's probably 100% true. From the inside looking out, you know, they don't play the 6-month game. They're playing a 100-year game. The President Xi doesn't have to run for re-election. He has the job as long as he wants, basically until he passes away. President Trump has to run for re-election. Who is better suited to play the long game? 100% the Chinese. So although we might say, look at what's happening, the market's down 23%, we're winning, I don't think that's necessarily true. I don't think there's any deal with China before the end of the year. There's no way they're going to do something before the midterm elections, in my opinion. My point earlier was, I think the president thinks that getting a deal done with Canada will help his leverage getting something done with China. I don't think that's correct.
If there was a deal, though, for sure, that would be a bigger tailwind for the Chinese market than it would be for the U.S. market, because you have two things working in its favor. For one, it's going to be, on a relative basis, weakening the dollar, strengthening the yuan, and also we can see what happened to Chinese equities as a result of all of this. Those two things could present, I mean, could you see a 25% pop in dollar terms in the Chinese market if we reached a deal before the end of the year? And I think the answer to that is absolutely good.
Well, hold on a second. What about the whole notion in Q2 we saw a lot of demand pulled forward, right? We saw a lot of double ordering. We saw it in the chips. We saw it in soybean. We saw it in a lot of different places. So, you know, some of that 4% GDP print that we saw might have been pulled forward from the second half. So I guess my point is that I don't suspect that you're going to get a huge pop from U.S. equities at all-time highs here. And obviously,
if there is a deal?
EM is the thing that's likely to move a little bit.